Today, we're going to cover essential tips that every beginner should know to start their trading journey on the right foot. Whether you're just starting out or looking to refine your skills, these tips will set you on the path to success. So let's dive in. The first step in your Forex trading journey is choosing the right broker. Don't rush into this decision. Take your time to research and find a broker that suits your needs. Look for factors like a variety of trading instruments, competitive spreads, a reliable trading platform, access to leverage, and strong security measures for your funds. Additionally, consider the broker's customer service and the educational resources they offer. It's crucial to ensure that your chosen broker is authorized and regulated by a reputable authority to protect your investments. Before you start trading, it's essential to have a solid trading plan in place. This plan will serve as your roadmap, guiding your decisions and helping you stay disciplined. Define your trading goals, your preferred trading style, and how much time you'll dedicate to trading each day. Determine your entry and exit strategies and establish how much you're willing to risk on each trade. Writing down your plan will make it easier to stick to it and avoid impulsive decisions. As a beginner trader, it's essential to accept that losses are part of the learning process. Even the most successful traders make mistakes. Instead of dwelling on your losses, focus on analyzing them and learning from them. Use each mistake as an opportunity to improve your strategy and refine your skills. Remember, trading is a journey, and setbacks are inevitable, but they're also valuable learning experiences. Emotions can be a trader's worst enemy. Fear, greed, and impatience can lead to irrational decisions and unnecessary losses. It's crucial to keep your emotions in check and make decisions based on logic and analysis rather than impulses. Find ways to manage your stress levels, whether it's through meditation, exercise, or taking breaks from trading when needed. By staying calm and focused, you'll make better trading decisions and increase your chances of success. Risk management is paramount in Forex trading. Never risk more than you can afford to lose on a single trade, and always use stop-loss orders to limit your losses. A stop-loss order automatically closes a trade when the price reaches a predetermined level, helping you minimize your losses and protect your capital. By implementing sound risk management practices, you'll safeguard your investments and increase your long-term profitability. Trading can be mentally and emotionally demanding, so it's essential to take regular breaks to recharge and refocus. When you're feeling overwhelmed or stressed, step away from your trading terminal and take a walk or engage in a relaxing activity. Giving yourself time to decompress will help you make better decisions and prevent burnout. Remember, trading is a marathon, not a sprint, so pacing yourself is key to sustained success. Patience is crucial in Forex trading. Rome wasn't built in a day, and neither is trading expertise. Don't expect overnight success instead. Focus on continuous learning and improvement. Be patient with yourself and your progress, and don't be discouraged by setbacks. Stay committed to your goals and trust in your trading plan. With time, dedication, and perseverance, you'll become a successful trader. To become a successful trader, it's essential to understand market analysis. There are two primary methods of analysis: technical analysis and fundamental analysis. Technical analysis involves studying price charts and using indicators to predict future price movements. Fundamental analysis, on the other hand, focuses on economic indicators, news events, and geopolitical factors that can impact currency prices. By mastering both forms of analysis, you'll have a more comprehensive understanding of the market and be better equipped to make informed trading decisions. Before risking real money in the markets, it's wise to practice with a demo account. Most brokers offer demo accounts that allow you to trade with virtual money in real market conditions. This allows you to test different trading strategies, familiarize yourself with the trading platform, and build confidence without risking your capital. Use your demo account to hone your skills and develop a solid trading plan before transitioning to live trading. Keeping a trading journal is an invaluable tool for improving your trading performance. In your journal, record details of every trade you make, including the entry and exit points, the reasons for entering the trade, and the outcome. Reviewing your trades regularly will help you identify patterns, strengths, and weaknesses in your trading strategy. Use this feedback to refine your approach and make adjustments as needed. A trading journal can also help you stay disciplined and accountable, ensuring that you stick to your trading plan and avoid repeating past mistakes. The Forex market is constantly evolving, so it's crucial to stay informed about current events and market developments. Follow financial news outlets, subscribe to market analysis reports, and participate in online trading communities to stay up to date with the latest trends and insights. Pay attention to economic indicators, central bank announcements, and geopolitical developments that can impact currency prices. By staying informed, you'll be better prepared to anticipate market movements and make timely trading decisions. Diversification is a key principle of risk management. Instead of putting all your eggs in one basket, spread your investments across different currency pairs and asset classes. This helps reduce the risk of significant losses if one trade or asset performs poorly. Additionally, consider diversifying your trading strategies to adapt to different market conditions. For example, you might employ trend-following strategies in trending markets and range trading strategies in sideways markets. By diversifying your portfolio, you'll be better positioned to weather market fluctuations and achieve consistent returns over time. It's essential to set realistic expectations for your trading journey. While it's possible to achieve significant profits in Forex trading, it's also important to recognize that trading carries inherent risks, and losses are inevitable at times. Avoid falling prey to get-rich-quick schemes or overly optimistic promises. Instead, focus on setting achievable goals and committing to a long-term approach to trading. Remember that success in trading requires patience, discipline, and continuous learning. By setting realistic expectations, you'll be better prepared to navigate the ups and downs of the market and stay committed to your trading goals. In conclusion, mastering trading requires a combination of knowledge, skill, and discipline. By following these additional tips, you'll enhance your understanding of the market, improve your trading performance, and increase your chances of success. I hope this video has taught you something new. Don't forget to like and subscribe to the channel for more videos. Thank you for watching, and see you soon.